You're tuned in to Agriculture Today, and we begin Friday's show with a grain market update from K-State grain economist Daniel O'Brien. Daniel, thank you for taking the time to join us today.
Thank you, Chevy. Appreciate it.
And Daniel, can you give us a broad overlook of how the market's looking right now?
Well, broadly speaking, we're still in a time of pressure from expectations of sizable crop harvest. More so in probably wheat. Again, we've had that harvest. Still, prices moving to the low side. We've had some strength here of late in corn. Again, in response to what USDA information comes out or not, and probably the most strength actually in the soybean market. And when you look at the corn price, here we closed yesterday with a D's contract at $4.10. The September contract is just going. It's coming into its delivery time frame. So we've kind of shifted our attention in terms of following the markets to into D's, and the carrying charges from D's to March, then just about 6 cents, about six cents a month from March to May, about five or so, and less there. So I guess I'd say when you look at the recent trading range for D's corn, we had been as low as about 391, 392, as high as about 417, and we're now at 410. And I try to follow a technical indicator called the relative strength indices index. And if it's at 50, then the prices are going sideways. If it's at 70, they're going up. At 30, they're going down. And the most recent readings of that the last several days are around 50. So given the drastic big fall off that we'd had in prices all the way from especially from June to now, to have prices having stabilized some to go sideways is a positive. And for soybeans, again, that different, somewhat of a different story for soybeans. We had been down to about, for November soybeans, down to about $9.80 2 or 3 weeks ago, and now we'd gotten up as high as about 1062, 1063, closed yesterday at 1048. So positiveness in the some positive trends in the soybean market. Again, that was on yesterday's close, and the carrying charges for beans are amazing. Strong carrying charge from the, of course, the SEP contract going out September. It's also entering into the delivery time frame from September to November, just under 10 cents a bushel per month. And you think, well, gosh, that's just the delivery time frame. But from November to January, just a little over nine and 3/8 cents per bushel per month, 7 cents out to March, then out to May, down to about 4 and 5/8 cents. So pretty good carry there. In the wheat market again, and we're watching Kansas City hard red winter wheat, and you saw a close yesterday for the September contract, also entering into a delivery time frame at 486 and 3/4 within D's. The D's contract 515 3/4, and a carrying charge between those two of again almost 10 cents, 9 and 2/3 cents per month. From D's to March at 6 and 3/4 to May, then to 6 and 7/8 and the like. So I guess I mentioned the carries because of the likelihood of not all grain being sold at harvest, especially if we continue to have evidence of strong crop size, et cetera. And with that, you'll probably see quite a bit of storage. In our report that we put together this week, we have put together charts on where basis is at for corn, for sorghum, for wheat, and for soybeans. And you really see pretty weak basis. Well, the weakest basis is for sorghum right now, waiting for exports to kick back up with the new harvest year, et cetera. And hopefully China's re-entry into that market. And then also pretty weak basis for wheat and corn in most parts of the state. We do have an exception down in the southeast part of the state for almost all these commodities. We've had coming in the southeast corner of Kansas, pretty strong relative cash prices, I guess, relative to the rest of the state, and just shows up step by step by step as you look at the areas of the state. So interesting to watch. I think I think also I've been watching the ethanol plant cash prices in Kansas to see how Kansas ethanol corn bids are, how they compare with other states around the nation. And whereas a year ago, Kansas had at this time not wonderful prices, but 397 average cash price. That was a year ago, and the next highest state was Nebraska 385, and most other states uh, were at least a dime or so less than that. Here this year, we in Kansas are now at 387 and a quarter, and the highest cash bid at ethanol plants is actually in Indiana, Ohio 393, and actually that 387 that Kansas has, at least as I observe it, is a little bit stronger bid relative to the rest of the nation than we've been of late. So interesting to watch.
You've talked a little bit about cash prices and things like that, but what about the futures market?
Yeah, I think that I guess I just reiterate that the futures market trends are uh, a strong corridor moving down for corn, bottomed out, we hope, maybe moving sideways now for wheat, an unrelenting negative trend. We had a bit of relief in, I guess, late May, early June for wheat, but then resumed on this tortured downward path. And most farmers that if they still have wheat to sell, they're bemoaning that same downward trend. It's not helping them any in terms of getting a positive selling price. And for soybeans again had hit a low in late July, early August, and jumped way up as we talked about, up from again about 980 up to about 1062, 1063. Receded off of that to 1048. So I guess we're standing back right now looking at these markets, and frankly really we're waiting for new USDA data on the size of these crops. We have on September 12th there'll be another USDA crop production and WASDE report. The USDA NASS will be out in the fields. They'll actually be out in the fields getting their own measurements to go along with what farmers are telling them around September 1st. So that's just days around the corner. In fact, it's probably started here today, Friday, and going on for days around that. And there's been a lot of concern about the size of the U.S. corn crop. That again, we had this large yield expectation projection coming out of the August. Yes, that's right. The August 12th report showing us that saying that we had about 188.8 bushels per acre, 16.7 billion bushel size crop size, but then had a crop tour that happened as the Pro Farmer crop tour happened about a week ago, came back with markedly lower expectations of about 182 bushels per acre. And of course, that you'd still have a tremendous corn crop, but it wouldn't be 16.7. You're closer to something closer to 16. Well, that differential make a big difference on the USDA supply demand balance sheet for corn and would impact prices. So I have my own set of numbers calculated that if we just keep everything the same and just change the yield down 184 bushels per acre, again, and asking the question, well, where do we end up? Well, we end up 30 to 40 cents per bushel higher, about three percentage points less for stocks to use. Ending stocks at 2.1 billion down to about 1.7. So, it's a big deal. We'll be watching to see also what happens on beans, soybeans. Also had a record high yield forecast by the USDA. I believe it's in essence it was about I think it's 42.5 thereabouts bushels per acre as well. Excuse me here. Let me make sure I've got that right. Don't want to put out something wrong on the air. Yes, for soybeans, 53.6 bushels per acre. And still a lower figure, but soybeans, frankly, more on the edge. of where things could go. I do want to mention that for wheat, we had in this last week, and even with all the other things that we're bemoaning for U.S. wheat, we had a tremendous week of U.S. wheat exports and of hard red winter wheat exports, and probably because of low prices and relatively low U.S. dollar and some problems, dry conditions over in Europe, et cetera. So all I guess all is not lost with regard to where markets go. We have the present things we're assuming, but we still have a number of things that we have to iron out in terms of final crop size and where, not just here in the U.S., but across the globe. And on the wheat, it's kind of a conundrum in that, man, we've got great exports flying off of U.S. shores during this time of low prices, and you wonder in the next 30 to 60 to 90 days how that wheat pace will work itself out, and if eventually we'll start to see prices level and move to the higher side.
Daniel, is there anything else that you'd like to add?
Just stay tuned for the September 12th report. That's really our next set of solid data that the market will pay attention to. And from there, I think it has the potential to be a very volatile day. In fact, if it's anything other than extreme bearishness, it'll be supportive to the market. So we'll see how things work out in a couple of weeks as we get more data in hand.
Daniel, thank you again for taking the time to join us today.
Chevy, thank you very much. Take care.
Again, that was Kansas State University grain economist Daniel O'Brien with this week's Grain Market Outlook. We're cutting to a short break now, but we'll have more for you up ahead.